All right. Quick mic check. Can everybody hear me okay? Somebody can type yes. Tell me I'm awesome. Yeah, all right. Thanks, JD. All right, cool. So quick housekeeping on this deal. If you're having audio issues, it's probably you. So the best thing that you can do is exactly what I do, is I call in. So if you click on audio options in the middle of the screen, you'll see the number. You just punch it in, and boom, you should hear me as just as if I was calling you on the phone. You'll still be able to display everything here on the screen. So that out of the way, the quick pitch, the 30-second sales pitch, we're $10 signals. You give us $10, we give you signals. I mean, that's really the nuts and the bolts of it. What we are is we're price action traders. We deal with the Forex markets. We do have affiliates for people that are interested in binaries, so that's definitely a route that you can take with that. But today we're going to be talking really just about Forex. I'm going to explain some transitions that we're recently making with our existing platform. And then thereafter, we're just going to dive in and I'll open up my platform and we'll just actually look at some trades, see if there's anything viable, and just go through that process of what's going through my mind with the markets and whatnot, and how to read, how to read that stuff. Price action is very unique in the industry. Subjective, okay? A lot of people are very familiar with like indicators, so like RSI or whatever these, like, you see these people that portray and have all these pictures of their screens, right? And there's all these wavy lines on it and this and that, and all of those lines, they're really trying to perpetuate some type of like signal out of that, right? That if X does this and Y does this and the I is dotted here and the T is crossed there, we're going to go in this direction. The problem with that, it doesn't work long term. It can work. It just doesn't. I mean, I've been doing this by profession. I'm a financial planner. So I've been around the markets for well over a decade. I've been trading Forex here for the last. I used to keep saying 7, but it's been 8 years now in the markets. And the only thing that truly stands the test of time within the market, and that's really just a strip down of all the indicators and looking at the patterns of human psychology, of people interacting with the market. Okay, I mean that's really what it is in a nutshell. So now talking about the transitions. Now previously, for the last 6 months, 7 months, I've been continually expressing the idea of an edge in a market, and if you have if 1 + 1 = 2, it doesn't matter how long it takes for 1 + 1 = 2, it's always going to equal 2. But what's happening is during market consolidations, during ranging markets, it can create a losing pattern for us at times. And some people, when you trade long term like we do, we don't day trade. We hold trades for days, right? And what happens is when you're in any type of lull, that also expands there too. So we just had like a quarterly update. Me and Steve, he's the other half of this, and we decided to cater more towards our market rather than me continually trying to perpetually impose my what's infallible, right? It's an infallible practice of just market portfolio and modern portfolio theory and just an edge and all that other stuff. At the end of the day, we have to create a product that is going to not only attract people but retain people. So here's what we're doing. And without getting too technical, okay? Without getting too technical, we're narrowing our standard deviation, okay? So when you think of standard deviation, and this is like almost like expert level thought, but if you think of standard deviation, right, think of it as the potential high and the potential low, okay? So there's months that we've had 30% gains, right? There's months that we've had 20% losses. So that's like a standard deviation that we can have incredible wins, but we can also have some really respectable losses at that same time. narrowing our standard deviation is squeezing that in. It's minimizing our risk even further. Because what I've been finding with our market, with you guys, and there's nothing wrong with you guys. I mean, this is this is our market, so we have to cater to it. But what we're finding is that no matter what we say works on paper, people ultimately still want to see results. People want that winning feeling. They want that satisfaction that if they're putting their money at risk, whether they win a penny or $5 or $10 or $100, that they would prefer that rather than having a series of losses then coupled by a big win to offset those losses. And so the only way that we can really do that is by narrowing our standard deviation. So that's what we're doing. So you will see an income have these really impressive days anymore. We'll never over that 2,000 pip day or anything have that day where we're going to be moping over that 1,000 pip loss. Okay, so we're tightening that in to always have respectable gains, minimizing our losses, focusing on the wins. So we're going to be converting our portfolio much more often. So rather than waiting for trades individually to close out, we're viewing the entire portfolio as one giant mutual fund. Okay, so we're looking at, instead of looking at these things individual, we're looking at this one big giant fund. And if the fund is performing to our satisfaction, we're gonna shut it down and rebuild it, and then shut it down and rebuild that. In doing so, we're looking for a 1 to 3% gain each time we close it down. Okay, and doing it, now with that in mind, we're probably not going to be carrying trades like 30 days or 40 days. I mean, right now tonight even we're probably going to shut this one down and convert it. And convert it over because it's sitting at like a 1 to 2% gain right now, and that's good. You do that a few times a month, and now you're at a 6% gain, and then everybody's still happy then, and we can just have these nice continual gains and not worry about the highs and the lows and all that other good stuff, which is fine and dandy because at the end of the day, that's what we preach. We will not be the outfit for you. Your $10 to us will not give you signals that will take $100 and make it $1 million. I promise you that. It will not do that. It will do that if you live to be like 200 years. The money you bring to the table with $10 signals, you will. Okay, it will expand. That's money that's nest egg. You want to retire early, whatever it is that you really intend on doing with that. That's something that you can utilize our signals to be able to provide for you. Now, if you're looking for more immediate return, like you want to put $100 at the table and you want to win like $500 a day or something like that, we have that capability for you as well. We just don't provide the service ourselves. We have binary signal providers, people that share our philosophy, that have been, we've vetted them. I mean, this is, some of these people, we've been viewing them for 6 to 8 months before we've actually finally approached them and said, hey, we like what you're doing. Here's the results. We want to cater a deal to you. And what's also unique about us is that we don't attempt to profit off of you guys. It's $10. It's $10 a month. We're not charging $200, $300. And what I mean by that is we believe so much in the philosophy of what we're doing that primarily, if we're going to make any money, it's going to be from our trading. But two, we do see a viable entity of that if we get enough subscribers, 50, 100, 1,000, that's for me and Steve, that's a decent income. So we don't have to worry about trying to oversell a service to anybody to keep them on board because we rely on their income for our means of survival. That's just not what we do. So when we brought on our partners from the binary perspective, what we said that, hey, whatever it is that you guys are going to otherwise give us to refer our business to you, we want you to go ahead and just give that then to our members. Okay, so like John Anthony's service, for instance, if you guys aren't familiar with him, just Google him. He is, without a doubt, within this last year, he is probably the number one renowned source if you want reliable, good, productive, profitable. Okay, the guy has like a 70+% win ratio. And if you know anything about the binary world, that's incredibly impressive. Now, if you alone were to go to John Anthony, you're going to be, I can't remember, it's like in pounds, so it's like, you're going to be paying 40% more, okay? So his commission to us would have otherwise been 40%. But because of the what we put together, we're discounting his service to you guys for that same 40%. So the way I look at it as you pay $10 to save 80, that's a deal, right? And same thing with BTS. That's another one. That's a U.S.-based one. So for guys, we got the whole globe covered now. You know, we got London, we got the U.S. So 24/7, you guys can be profiting on these binary markets, you know, from these signal providers, right? And with BTS, we had similar arrangement, except it's 50%. Now, they otherwise charge $200, so you could independently go to these guys and pay $200, but through us, you can get it for $100. It's one of these a little bit of no-brainers for those that are interested in the binary markets. But enough of that. Enough of that going on. What I wanted to do is really just go back into the charts. I'm going to share my screen. Well, let me before I go there. Any questions? Do you have any questions? Alan, caller 408, Charnel. Who else is in there? JD. Larry, Leah, Linda, Rick. If there are no questions, somebody tell me I'm awesome, because then I know that I've said everything that I need to say, and everybody just totally understood it. You know, all right, great. All right, so I'm going to go ahead and I'm going to share my John Anthony, it's 40% off. He doesn't. I don't. You know, it's funny. I'm like the force. I think it's like $150 a month otherwise. So whatever 40% off of that. We have a 40% discount with it. So if you are a member, you can go into your back office. You'll see the partners, and then you'll see those providers. And let me believe you me when I say this. We tried ourselves to do binaries. We tried it ourselves, and we failed. We had short-term success. That was very impressive, very exciting, but we weren't able to maintain any particular type of edge. We had to establish a nice relationship with a binary provider. Without an edge, nothing matters. And you only can really solidify an edge when you look at things over the test of time. And John Anthony Signals and BTS, these guys have hundreds and hundreds and hundreds and hundreds of signals that you can't dispute, you know, the fact that these guys actually know what they're doing and they're profitable in that arena. As far as the broker that we're using for binary options, I still like Blue Mint Bank. That's who I like. I stand by those guys. They're very straight up. They're U.S. based, so we can hunt them down and beat the hell out of them if they do our people wrong. And they just do well. Why I like them is because their story makes sense. And, the binary. Oh, let me get to that, JD. Indirectly, they are. Indirectly, and I'll explain that in a second. What JD's asking about regulation is because there's a binary market that's out there overseas that does whatever the hell that they want to do. They do. I mean, when I say whatever the hell they want to do, they do whatever the hell they want to do. And a lot of times they're essentially run like casinos, where you go to them. They're. But it's almost like advanced Ponzi schemes, right? So it got so prevalent that of the shadiness of how they are actually operating their business that the SEC got involved, federal government bodies got involved, and they started pushing these companies out of the market to the fact where you previously were able to go, you can't go anymore. And these Americans were upset by this. And I'm like, you idiots, you were doing nothing but losing your money over there because they were taking advantage. And what happens is when you bet against them, and you get connected, say, with like John Anthony or BTS, where there's a perpetual win rate, they depend on you to lose for them to make money. And when you win too much, they don't have the capital to be able to endure that. So to answer JD's question, no. Bluebit Bank is in the U.S. They are not. They're not like regulated by the state. They have to go through this process, and that's not a big deal. But here's how they do operate. That when I talked with them myself through that process, and I was very comfortable with it. Bluebit Bank doesn't. They don't trade. You're not betting against them. They have access to a clearinghouse. Okay, so they all the money that you put towards them when you're placing. No problems with withdrawing in JV. Let me tell the story. Then you'll exactly understand what I'm talking about. They're connected to a clearinghouse. Now, for most people, they have no idea what that means, right? But like I'm in the financial world, so I understood that a clearinghouse is where you go to like flush your money through. Like you're right. So like there's an options market out there. There's a stock market that's out there. There's a currency market that's out there. There's all these markets where money just flows through. And there's like these central arenas, these central banks, these clearinghouses, whatever you want to call it, that all the money goes through to match. Because no matter what you're doing out there, whether it's binaries, in a fluid market, whether it's binaries, whether it's stocks, whether it's mutual funds, whether it's covered calls, options, whatever, futures, whatever it is that you're doing, it's a zero-sum game. What does a zero-sum game mean? It means that if I win $1, somebody out there lost their dollar. That's just how it works. If I lost $10, somebody out there won my $10, and that's literally how it works. So when you hear about like the stock market crashing and millions of dollars were lost, they weren't lost. They just transferred hands. They went to somebody else. This money didn't like just disappear. Or when you hear like there's all these impressive gains, yeah, the Dow did go up, but somebody had to have been on the losing side of that. And that's just how it works. So to answer your question, they're vicariously regulated because they flush all of their money through an options market. So if you place through their clearinghouse. So if you're placing a $100 wager, you're not placing it with them against their money. They put it into the options market, which is a $1 trillion a day arena, and that's exactly what it's doing. So while they're almost like the middleman. So where they get compensated is they don't care whether off of every trade that's made. So they just want us to trade. Period. While overseas brokers, they need for you to lose the capture, right? Like to capture money for themselves. These guys, they just want you to flat out just go ahead. We don't care. We just want you actively trading. Trade up 1 million times a day. Trade once a day. We don't care. We want you trading. So when I understood that, how they operate, they're pretty much like a white label entity, right? So they're just this white label entity behind a clearinghouse. I was more than okay with that, and that's why I bet my reputation on them. And I would think that means a pretty big thing, because I don't think I would ever want to expose anybody that would hurt them. That's just how it works. We make nothing. Bluebit Bank does not commission us. They don't reward us. They don't give us anything other than respect and a thank you call every now and again for us putting them out there like that. And the same is true of Oanda. Are you auto trading? It's a signal. The signals. Like John, you got to be on his what? Like with John Anthony, you got to be on the site. It's almost like a live session, really, for both of them. You got to do it live. John, though, is introducing here a Nadex auto trading platform. So that's how impressive this man is, that he's contracted a deal with Nadex to create a customized program to auto trade a signal. That just blows my mind how awesome This guy is. So we're not gonna. Yeah, Steve said we're testing this out first. We're not gonna put anything out to you guys. You know, we don't need the $10 that bad. So we're not gonna hurt you. We want to be the people that are. The goal for $10 signals came out of a frustration of the marketplace. I think I've told this story a million times, where we just saw people continually blowing their accounts, getting ripped off, paying $200, $300, $400 a month on things that just weren't working for them, on the promise that there's going to be these great rewards. And it just really wasn't working out. And that's why, I talked to Steve, about last October, I could do this better. We could charge next to nothing and really just educate people. These trading sessions, we don't do them as frequently as we otherwise because, when we did too often, nobody would ever show up because it's really just me saying the same thing over and again. But it's good to have these refreshers. So we'll probably at least do this once or twice a month. But I do have to tell you that if there's ever anybody, one of our members that ever needs individual attention for anything, me and Steve, we don't punch in at 9 to 5. So we're just entrepreneurs. So I work 95% of the time at home. I'm just, right now, I'm just at home. I'm naked, believe it or not. I'm naked trading. I'm naked. I'm in my own home, right? So it's I'm here all the time, and I take the time to be able to answer the Facebook questions that come through, and sometimes I'll even take somebody aside and open up one of these and just walk them through any questions that they might individually have. And I don't charge for that stuff because at the end of the day, I want every last one of our members to be able to have the opportunity to go out into the market themselves with confidence and learn how to develop their own artistic strategy behind price action to make it work for them. Now, that sounds counterintuitive to the fact that if I educate somebody to the level where I'm at, why would they continue to be a student of this, right? Why would they continue to pay $10? Well, in the next few weeks here, we're revamping our affiliate program, so you'll see that it's still going to be advantageous to continue developing a network around us, because then that cash flow will be in a direct second income towards yourself. So if there are any questions, let me know. If not, we'll pop in, we'll look at some charts, and we'll really dive deep into price action trading. If I say anything that goes over your head, let me know. I'll bring it, I'll bring it back to par to a point where you guys can get it, because that's important. Do note that I don't trade a system. Okay, so there's no set system that I have. There's no A plus B equals C. It just doesn't work. So I look at patterns. I look at things. So every time we're looking at a pair, a currency pair, it can be a different story every time. So what you need to do for yourself is think about the conceptual concept. Is that even a word? It's almost like a redundancy. You need to think about the concepts and the thought process of what's occurring. Right? And always think about the human psychology, right? The buyers and the sellers. Who's buying? Why are they buying? Why are they selling? Don't worry about the news, because price action follows the news almost immediately. Sometimes even it precedes the news. So don't worry about the news. Don't worry about if it's Monday or Tuesday or 10 o'clock at night or 1 in the morning. If you're trading at least on a 15-minute time frame and above, you should be all right across the board from a price action perspective. So I'm gonna open up my desktop here, and we'll spend the next half hour here. I got some other stuff to do, so I have a hard stop at 9 o'clock because I gotta there's a meeting here. Oh, get rid of that. All right, so hopefully you guys can see all that crap. All right, there we go. Screen sharing has started. All right. If the screen freezes, or if I disappear or something like that, just hang tight. I'll come back. They have done software updates on any meeting, but who knows. So what I'm going to do is I'm going to go through all of these pairs. We monitor 20 plus pairs, and we'll see. And we'll spend a little time on something if it looks right. Some of these things I'll be talking about that have happened in the past, which will make me sound like a genius because it's easy to, you're reading a book, it's easy to go back to page 1 and tell you what happened on page 1 when you're on page 50, right? But it's still the concepts behind it. And we'll also look at things that are currently happening so you can really prepare yourselves for future trades, okay? So anyway, all right, so Aussie Canadian dollar. So what's happening here? There's been one. When you're looking at a pair, you want to try to first define the overall market bias, right? And it's easy. It's always easy to determine that in the past because you look at it in the past and it's like, oh, this is what's happened. So this is that. Oh, and it was obviously a ranging market. It's very hard to determine a trending market versus a present time. It's extremely difficult. So sometimes you get faked out pretty often. Well, what's a ranging market? A ranging market up and bounce down. People lose money during that time frame. It just happens. And so this was like, that's why all last quarter, really just sucked because there was no clear direction in the market. It was just bouncing up. You think it's going one way, it doesn't go, and like here you think this breakaway is going to do something, it doesn't, and it just sucks a lot, and it just whatever. It is what it is. So you first want to determine a market bias. Do you think the market's moving up? Do you think it's moving down? And the best way to determine that is by looking at the higher highs and the lower lows. Let me knock all these out of the way. So what is that? When we look over here, here's a high. So you want to look at the next significant high, right? This is a high, right? So what does that mean? Price went down, price went up, price went down. That's a high, right? This would then be a low. Here's a down, so we had a lower low, right? Price went up, went back down. So what's interesting here is we had another lower high, but we had a higher low, right? So what happens there is what I do then is I draw, that's not what I want to draw. I draw a trend line. And I create a little bit of a decreasing triangle, right? Like that. So what I'm looking for is I would then be looking for the break of that. Because price is going down, price is going up. Based on the higher highs and the lower lows, or the lower highs and the higher lows, I know it sounds goofy, it's hard to determine which way price is going to go at that point. So when price broke out, that's a really, really good indication that price could continue up. But it didn't because the market's going to do whatever the hell the market's going to do. To begin with, you just can't control the market. All you can do is look at probabilities, look at good measurements. So if you were to place a trade here, at that next open, you would have probably been in a losing situation. Now, likely, a prudent speculator would have at least had waited for the break of that before continuing forward. But either way, this is a really good example of a ranging market. Now, when we look to something more immediate, every candle has a story to tell. Okay, there's buyers and there's sellers. That's it. There's nothing. There's buyers and there's sellers. The market isn't some animal. It's not some beast. It's not some personification. It's not God. It doesn't just do its own thing. It's not random. It's driven by two things. People are buying. People are selling. That's it. When more people buy, price goes up. Supply and demand. If you owned a Twinkie factory and 100 people were at your door, but you knew you had a market for 1 million in the area, you would probably lower your price, right? Because there's not enough buyers. All of a sudden, 200 people show up, 300 people show up, 400 people show up. You might think, oh, I'm getting a lot of people. Well, let's $1 to $2 to see how well it sells. 500 people show up, 600 people show up. There's more of a demand, so price is going to then increase. $4, $5, $6, and that's what happens. But now, see, you start losing those. You got to a point where you're selling your Twinkies now for $1,000 a Twinkie, and people started leaving you. Well, what do? You want to try to retain them. Okay, we're going to lower the price. We're going to go to $900 for a tweet. No, $800, $700, $600, $500, $400, $300, until you get to a point where somebody says, "Oh, okay, I'll buy in again at $300." And that's really how the market works. That's what's called a market maker. There's somebody that is moving that price up and moving that price down, and their job is one thing only: to get as much volume as possible. So if there's not enough buyers, they're going to drop the price. They need to drop the price. And if there's not enough sellers, they're going to increase the price. It's just a supply and demand. So how that works on an individual candle is we'll look at this candle here. Is there's 4 parts to every candle. So I'm going to highlight this. I don't know if you can see that very well. But there's an open, there's a high, there's a low, and there's a close. Okay? So the open of a bearish candle is going to be the top part of the body. Okay? So what happened here is price opened up that day at that price. So what we see here is price fell all the way down at some point throughout the day, fell all the way down. At some point throughout the day, it got all the way up here, and it ended up closing down there, right? So price at some point went up, went all the way down, came back here, right? So what is that telling us? That's telling us that at some point throughout the day, there was a shit ton of sellers in the room, that they're all selling, dropping the price. At some point, and this is likely because this is a pretty good area of resistance or support in this particular instance. If I ever say support, I mean resistance, and if I ever say resistance, sometimes I mean support. 2 words are really synonymous. It's just a line. It's just a line where price rejected off or bounced off. But so what happened here is price got to around that price, and a lot of buyers got into the room. For whatever reason. I don't care why. I do not care. Maybe they read something in the paper. Maybe Obama said something. Maybe Trump said something. Maybe King Mucky Muck killed King Ducky Duck. I don't care. I don't read the news. I don't care. I care about what people are doing in the market. That's the essence of price action trading, to get around the psychology of human behavior, okay? So at some point, price continued moving back up then. So there was more buyers in the market. So when I look at this candle, this is telling me that price dropped. It got significantly rejected. So while it's still technically a bear candle, look at that pin bar. Look at the size of that pin bar. That's indicative to me that price is going to start moving up. Now, granted, this is in the past. I see what's happening, so it's very easy for me to look like a guru, right? But roll with me anyways. So then the next day, price gapped, actually. So price opened up here, right? It opened up here. It fell at some point throughout that individual day. Oh, I take it back. Price opened, this is a bull candle. So price opened here, so it gapped down. No, it didn't gap at all. It just bounced right over it. My mistake. Price came down here and moved right over here. No gap in this one. Price at some point throughout the day moved up, and at some point throughout the day moved down. I mean, we can zoom in to see what the specifics were, but on a daily candle, I don't care. I just care how the candle ended. And what happened was, again, there's enough sellers. These probably the same guys from the day before. They're like, price is going down. It's got to go down. We want it to go down. Trump said this. Donald said that. M&I Bank did this. Interest rates, something. Greece sucks. The Olympics are going to be in Taiwan. I don't know. Whatever the news says, people reacted to it, right? Somebody shot a Canadian goose. A lion died in Africa. Who the hell knows? People reacted to it, and they changed the influx of currency. Maybe a hedge fund made a move. It doesn't matter. Who cares? Who cares why they did it? But price fell again at some point. But it got rejected. There were enough buyers that said, not happening, and they took over, and then they closed. I always look for breaks of candles. So what I mean by that is this price closed above this here. So when you look at a price action candle, right? When you look at a pattern, you want to look at the last 3 candles to really tell you the story of what's going on. So when we look at 1, 2, 3 here, we look at this candle. Price went up, price went down, but there was really no significant direction. But it was pointing, because there was more of a pin bar here, it was more indicative that it was going to drop the next day, which it did. It did drop. And some prudent investors or some wise ones or whoever took profit really right about there, and then price, rocketed back up as either the sellers are buying, or the sellers are bailing out of their trades, which is possible, or new buyers. It doesn't matter. It doesn't matter what the reason it happened. So here then here was an indecisive candle. Here we had a break that it just failed. It couldn't get down below where it needed to go. And it closed in this candle. So when I see a body that's within the previous candle, that's telling me that there's a potential reversal or there's indecision. So it's still not enough to make a decision on. The next candle went down, went back up, closed above. This is something that could potentially at this point be more of a decision that price might want to go back up. We had an indecision, we had a rejection, we had a second rejection that closed above it, and then boom. Again, the next day, if you're watching it throughout that day, you probably had a heart attack if you went long, because you would have saw the price went all the way back down there. But then what happened? There was a tremendous bull rally, and price closed significantly above all of this consolidation here, which would then been a really good indication that price would have probably continued up. Now, let's take this all away. There's still another dilemma that we face with that, okay? And this is why it's all an art, and nothing's ever 100%, right? Because here's the dilemma. All of that is telling us that it could potentially, let me try to redraw this. All of this is potentially telling us that price is going to move up, right? But what's also that we have a concern about is that we have a series since May, right? So for months we've had a down. Granted, it's a little bit of a downtrend, but we've had a downtrend that's been occurring. Okay. But also, when you look at the lows, we've also had higher lows. So that's also something of significant interest. So we haven't traded this pair, in a little bit here, because of that, really that type of indecision. Now, here would have been a good opportunity to take a potential trade. This candle here broke free. It broke above it. A prudent speculator would have then took a trade at the break of this candle. And that's why you always want to take trades at the break of the candle, because you don't want to necessarily always just hop in, because you don't know. It can work against you, right? Especially if you're trying to minimize your standard deviation, and that's the variance of an individual trade. And here, so if you would have put it in an order, it just wouldn't have got fulfilled. So what happened then thereafter? Let's talk about these. This price started falling. It fell within this candle. Inside bars are very important to me, because it's telling me that price doesn't have a clear understanding of which way it wants to go. Then this day, price rejected. That's cool. Price still looks like it wants to go back up, which could have confirmed your idea from even over here. Would we have been in this trade yet? I don't know. Finally then, even here, price significantly broke out, but it didn't clear this. All right? It didn't quite clear that. And if you were to draw a horizontal line, you would see that this is a pretty big area of support and resistance. Like, look, there's another pin bar here. Price rejected there, right? Over here, look at this big old bar bounced off of that. Over here, there's an inside bar candle that it rejected below. Over here, this was an entire month of indecision around that area. So you want to look at those areas of support and resistance to decide whether it's even opportune to get yourself involved in a trade. In this particular instance, price reached that point, so maybe there were some day traders or what have you that did take that ride up, and then they likely pulled out at that particular point, and then price then just continued to plummet. So for me, this is a no trade. I don't know what price is doing yet at this particular point. Yeah, it's going down. But we have a couple things that we have to really worry about. Is price going to continue back up? Now, if it does move back up, like the next couple of days, then it might be a viable trade because we have a higher high and we would have a lower high, which is telling us that price is then going to start trending in a particular direction. So it might be opportunity at that point to be able to do that. Any questions on that? I didn't mean to spend so much time on one pair, but even something. Now, here's what happens. When I trade, I don't spend this much time on each. I just look at it and I'm like, oh, no trade, and then I move on. And I'm like, oh, let's take a look here. Price is higher high, lower high. I'm still thinking it's moving up, no trade. And that's how my mind works on this stuff now. But at one point, I was sitting there studying, looking at each individual candle to try to gather an idea of price direction. Let me pop in here. All right. No questions yet? Somebody type something because I think I'm supposed to see. Tell me I'm awesome. I think I'm supposed to see a little chat box or something that somebody has something to say. I'm not awesome. Is this on? Are we working? All right, whatever. All right, so I'm going to assume that you guys hear me because I just have to make that assumption. But anyways, all right, so Australian dollar, New Zealand dollar. Here you can see some of the work that I've already been putting in place just from previous days. I'm looking at like price rejection. So here I drew some Fibonacci because I'm curious on how price is really reacting around 6218, and I drew a downtrend. So to me, my bias on this pair is starting to be a little bit south. And I'm also looking at correlations because the Australian dollar, when you're looking at the Australian dollar, it's on the front half of that pair. And when I'm looking at the Australian yen, Australian dollar, Canadian dollar, it's moving down. So I look at those correlations to really further my decisions. But on this particular one, it's still no clear indication of price direction, right? Because here we have a candle that's rejecting again. Now, granted, we still have another hour before I'll really make a decision on this because price can really change. But we have some consolidation here, right? It's a couple inside bar candles. Price bounced down, got rejected. It looks like it's going to close in between this, which would then make me wonder if price is going to continue up. But if it continues up, look at this. We have area of support and resistance coupled by a downtrend. So is price going to break through that? So I really wouldn't be interested in even taking a long trade unless it could clear all that, like at the break of this high right here. Okay, Australian dollar, U.S. dollar, same thing. So price is moving down. Now this is one that I would probably be more interested in taking a trade. Reason being is here we have this consolidation again from just the Australian dollar is just a bastard this last quarter. But anyways, so we have all this consolidation. Price tried moving up, got rejected. Couldn't quite clear the high at the break of that. It fell, and it fell again. So for me, this is probably a trade that we're going to take tonight. I'll have to keep looking. But I would be interested if price continues to go below that. I would think then that price is going to continue to go down. Why is that? Because it couldn't make it back up. Price has got to go one way or the other. It's got to go up. It's got to go. It just has to, right? It has to. So I mean, why that is because there's buyers and there's sellers, and that's just how the market works. So price could not quite make it above that, and for whatever reason, people just are freaking out about this area. For whatever reason, I don't know. There's whatever reason, maybe it's some hedge fund manager's unlucky number. I really don't care. But we had an inside bar. This was, I think, that Sunday candle. Price tried going high, got rejected. Tried going low. This is a little bit of an indecisive candle, right? A little bit because you have pin bar on top, pin bar on the bottom. Even though it's a bear candle, you got to pay attention to these pin bars. But I think I would potentially be more interested if it broke that. I would think that price would then, if it's going to work all its way down that way, especially coupled with the fact that it's been dropping for a while now. I would be. I mean, this has been falling since May, right? So I would be comfortable with a trade like that. I hate the front for the time being, but zero motions involved, right? Zero motions. This is currently downtrended. Price broke, but what's interesting, the price broke and it's now bouncing off of that trend line. Trend lines, there's no science to it. You just draw a line and see what price does around it. I mean, that's really the long and short of it. Here I already had an area of support. Now we have a trend line on there, so it looks like price is bouncing off. Now we have a little bit of an indecisive candle. Tried getting a higher high, but it couldn't close above that high. And then now today, we have an inside bar candle that it still couldn't really find direction. So to me, this is then another area of resistance. And really to solidify that is you just look at the past. Here, this last quarter, it was screwing up around there. Here, we had a bounce off of that. And sometimes these last years, look at this. This is from 2011. Price got to, and then that's, it's as far back as that. So when you draw a line of support and resistance, it's not a bad idea. It'd probably be a relatively good practice to just keep it. I don't, because I just throw it on there and I just peel back anyways. But it might not be a bad idea if you're just starting to learn, like support and resistance. That if you draw a line, leave it there and just see how price reacts really around it. So for me, this is a no trade because I don't see any clear break at all. Canadian dollar, Japanese yen. Previously, we had a sell stop. We still do. We still have a sell stop on here. But price didn't get to where we wanted it to be. We had our sell stop on here after this move here. Price has been following since June. What a sell stop means is that it's an open trade waiting before we take the trade. And why we did that is because price started bouncing up again, but it was a lower high, and the huge rejection going down. So my thought was if it continues to go down a little bit beyond that point, it's probably going to continue on downward. It didn't reach it. So that saved us, right? It saved us from a loss rather than just jumping the gun and saying, that's what it's going to do, but price moving back up. I'm not quite at a point where I want to cancel out that trade because look what's happening now. Price bounced up, got a little lower. Today, this candle is all over the damn place, so it's really indecisive. So it'll be interesting to see what happens tomorrow. If it still moves down, it's still viable because this high here still isn't higher than this one. So it's still, and even though this was a higher from the current development, right? You said don't look at it really from the current development. So you could even draw a line earlier about there, and then you can see how all these, again, if you go back, that holy hell, it's all these price rejected there, price rejected there. You can see a line or just price. You had some issues on, So we'll see. We'll see if it continues to move down. We'll just keep it for now, Swiss franc, Japanese yen, downtrend, but again, really indecisive candle at this particular point. No breakout yet, so no trade. Euro, Australian dollar. This was one that we did take. This was a signal we took yesterday. I apologize. In my error, I did not take the trade on our account. So our account is showing less of a figure than what people that have actually traded. So good job for the people that didn't follow the account but followed the signals on our group because price shot up. And the reason why we took that trade yesterday, and I know I was kicking myself today for not for making that error. It doesn't matter. It doesn't matter. Everybody's still profiting off of it anyways. Well, and a very simple reason. Price is starting to move down. Right, starting to move down, but we had this area of consolidation where it just couldn't really quite get around. around it. We had a rejected flood down here. It tried moving down again, but these little pushes just weren't strong enough. These are little weak, tiny little itty-bitty candles that it really couldn't break beyond that. So I was really interested when I saw this, right? I saw that, and I'm like, this price is really trying to break away. And that was then supported by the idea that price has been moving up. I'm like, well, let's just take it for what it's worth, you know. And then, well, what did it do? It shot up, and it, you know, it stopped really around the area that you think it would stop. Well, it was a good trade. And again, look here. That was a big area of stop resistance there. Over here, you see some consolidation on it. So today we're probably going to convert the portfolio, shut it down, and rebuild it. And, you know, it will probably make, you know, for those that took those trades, we'll probably make like 2-3% or whatever. I don't know. You guys tell me what it is. I think for us, it's just going to be a 1.5% on our verified account. But anyway, Euro franc, same thing. It's currently in an uptrend, but because it's still in an existing uptrend, I don't really like when things are too developed. I don't like hopping on board it. I like getting at the formation of it. So this would have been real good to get in around there rather than trying to just get in now. New Zealand dollar, Japanese yen. It's in a period right now. This is a ranging area. So even though it's looking like it's starting to move down, I really wanted to break really below that, you know, before we even start making a move on that thing. Here, uptrend. Price this was an interesting. I was looking at this guy because you know, price. This would have been probably a potential of seeing a new downtrend if price would have broke past it, but it didn't. It continued up. It's created now an inside bar. So it'll be really interesting to see tomorrow if it's going to break forward. Because if it does, this would then support. We'd probably redraw that trend line then, and then take an up trade, because then the price is probably just going to still keep moving up. And which is then supported by the U.S. dollar, Japanese yen, which is a trade that we did also. We had an open trade here for the last couple of days. It triggered today. And that's where, like, I think we marked here. We were looking at the break of this guy because price started moving up with break. I was like putting price out a little bit beyond just the break of the candle. So I always throw it out to the nearest like 10 pips or whatever, just to give it that little wiggle room. Because this would have freaked some people out. Like if we would have just took it just at the break of it, they would have been all mad at me for like 3 days. And oh, okay, we love you again, Sean. You know. So, but it's good that we did that because now we took a nice conservative approach, and we're a little bit in the money. You know, on this thing, we're up like 450. Well, let's not talk dollars. We're up some pips right now. You know, and then so everybody's happy with this, and it's probably going to continue up because it's in a current uptrend, and it also has bounced off of the 38.2 line, which is here, which is Fibionaci. If you guys are interested in Fibonacci, I talk about it to great extent in our members area. I probably talk about it in pretty much every. It's my go-to piece. You know, but I'd rather spend more time on the specifics of candle action pattern. I'll bounce off the 38.2 line, even the 23.6 is a good measurement to understand a weak retracement and a strong previous trend. All right, so bounce off that 38.2 line. That was telling me that this was a strong trend, weak retracement. So my bias would be bull. Over here, this might be a potential as well, because if price moves below this, it would have broke through all of this business, and the New Zealand dollar, U.S. dollar, this has been descending since April. Now, you're going to find that you're going to run into people that are afraid to take trades when price continue down, because they have convinced themselves that there is such a concept as overbought and oversold. I'm telling you now, price is what price is. It just doesn't. Price is exactly the price of what people are buying it for and selling it for. There's no such thing as overbought. There's no such thing that this price can't go any lower. This price can't go any higher. That concept doesn't exist. I mean, look at how that's been dropping. This has been like since July, a year now. This has been dropping. So at what point would one say that it can't go down anymore? Oh, it fell to this point. Oh, it can't go down anymore. Oh, it broke that point. It can't go down anymore. It can't go down. It can't go. Look what it did. It hasn't been this low since 2011. Surely it can't go down anymore. Look, you're rejected off this. It surely can't go down anymore. And then now look, like 4 years, it's just creating all-time lows, really. But then, now the 9. So it still could potentially go down because it's been down there. So forget the idea that can be overbought or oversold. It doesn't exist. You look at what it's currently doing. With price action, you just want to go in the direction of where price is moving, and that's it. So if we take this low tonight, I don't care how long it's been falling. For all I know, it can fall back to that low that we saw back in 2009, and that's pretty attractive for prices now to drop all the way back down to there. I would think that that's pretty good. Well, 2002. How many years ago was that? Like 13 years ago? If it even goes back to, I can't even pull data beyond that. What happened here? Oh, okay. All right. So either way, no such thing as that. But when you're taking a trade in an existing trend, you just want to take it at an opportune time. And what I mean by that is where price has started bucking against it and it's realigning itself back into the existing trend, then you can say, you know what? It's probably okay that it's going to keep going down. And if you're wrong, then you get to go out. You get to pull out. That's the nice thing about Forex is you get to really determine your profits and your losses. But I really got to get taken off here. So and then I'll hang out with you guys for another 5 minutes to answer questions and stuff. But I just have I already got Skype guy. I got all the crap I got to do tonight. Okay. Let me end this. And then let's get into some questions. Yeah, we'll provide the answers. Let me ask this. Is this beneficial? Do you feel that even though you might not understand anything, that you feel like maybe you're a little bit better off having looked at that? Nobody. Somebody tell me I'm awesome. If nothing else, just remind me how amazing I am. All right. Well, I'll give you guys a couple minutes to think of a question. If not, then we'll end this. We'll end this for tonight. But and I appreciate that you say that, because what's interesting is everybody that's selling a system out there, they haven't they literally have not created anything. They're not bestowing any new logic to you. They're not helping you. What they're doing is they're they guru on that, portraying all their wins and showing all this other stuff, and then they want to charge you an arm and a leg to make that happen. Now, don't get me wrong. If you have a very viable product out there that does work, you should charge what you can get for it, and that's fine. But I'm very much against people that they're the ones acting like they're all bling bling. Oh, I'm sorry if my audio. Linda, did you call in? if audio is cutting in and out, the best thing you can do is call in. It's literally, it's a conference call. It's literally, you hear me as plain as day then on that. But back to my rant of the guru. The guru will want to sell you. He wants to perpetuate that he knows something that you don't know, and he's not going to share it with you for his knowledge, right? I mean, that's why we go to professionals. That's why I have an accountant, and 'cause I don't know how to do all this. So we pay these people, and they perpetuate that idea. But when you look at their past, how do you go from being a bartender to a Forex genius overnight? How do you go from a data entry guy? I don't want to insult people, but there's some people that may be some geniuses, but I just don't. I don't see it. And every time I've challenged them on that to prove it to me, they've all failed that test because they want to. They've bashed me, they've insulted me, they've ran my name through the mud, all on the basis that I'm just trying to put it out there. We lose. We don't hide. We don't hide any loss that we had, and we don't hide any win that we had. It's all out there in the open. And it all makes sense because this is a market that moves up and down. You're going to have times that you win, and you're going to have times that you lose. The objective is just to win more than you lose, So seriously, beware of that guru. If you're genuinely interested in learning Forex, you have to ditch the indicators. You've got to read candlesticks. You get a hold of Steve Neeson, NISON, read on his stuff, read candlestick patterns, read about Fibionaci, read or just trend lines. Read about those simple concepts. And you're going to still lose, but you'll find that your wins are going to outweigh your losses. And then you're truly then just trading. You're going back and forth. We're carving out an edge in the market that no matter how many times you win or no matter how many times that you lose, your net result is going to be positive. And that's really that's my spiel. So for $10 a month, we teach this stuff for free. You don't ever have to do $10 a month with us, ever. You could always just come on board and just learn this stuff at no cost. There's nothing that. The only benefit of having our signal service is some people really dive deep into our previous audio, our previous webinars. Also, some people just don't want to learn. That's fine. I don't want to learn how to do taxes. So we have an accountant. I don't want to learn how to bleed my brakes, so I could learn how to bleed my brakes, but why? When there's some dude out there that I can pay to just do that for me. I don't want to drill my own teeth in you get my point. So we provide that, and we do it at a next to nothing cost, and I truly value all of you for taking your time out. You guys got 1.5 million things that you could be doing tonight, and you chose to come here, so I'm very grateful for that. I thank you for that. Hopefully you took some good nuggets away to put yourself in a better situation than you were before, and I truly hope that we can have $10 signal cruises where everybody's just making boku bucks in the market, and it's just all paid for by the good successes that you guys are having within the market. So take advantage of these binaries, make yourself some immediate income, and then come back and on the Forex end, let Forex be your retirement nest egg, and I think we put together a good program for you guys. So any questions, you can hit me or Steve up on Facebook. If it's technical, talk to Steve. I don't know anything about our website. I don't ever log in. I know nothing. I know nothing. So any technical questions, talk to Steve. Anything Forex related, talk to me. Anything binary related, talk to Steve. He does all the binary stuff. I stick to my Forex, and I'm just dandy with it. Nothing against binary. I just stick to my Forex. And that's it. So I'm gonna end this. And if you guys have any questions, you guys know how to get a hold of us. So thank you for stopping by.